Hello and welcome to this week's Gold and Silver Club Weekly Commodities Review in alliance with ACM Gold, presented by myself, Phil Carr, and Nick Cowsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end-of-week summary for the metals, the energies and agriculture. We'll look at gold, silver, oil, natural gas and coffee. We'll also look at the top trades of the week. We'll cover live market commentary and technical analysis. We'll look at the week ahead, so key events looking forward, and of course we'll be answering any of your questions. So this week, gold, we've seen the gold price soar to a 9-week high after the FOMC statement. Gold price surged over 4% on Thursday to record its best one-day move in 8 months following the FOMC statement and continued tensions in the Middle East, which boosted safe haven demand. Following the release of the highly anticipated FOMC statement on Wednesday, the US Federal Reserve signaled it would not raise interest rates anytime soon, which was disappointed traders who were expecting hints of policy tightening. The Fed also slashed its forecast for 2014 economic growth to a range of 2.1% to 2.3% compared to its March forecast of 2.8% to 3%, which suggested that the US economy is estimated to grow a slightly slower pace than previously expected. These comments from the Federal Reserve, combined with intensifying geopolitical tensions in Iraq and Ukraine, rekindled traders' appetites for the precious metals. Gold price soared to its highest level in more than 2 months, from $1,260.68 an ounce prior to the FOMC statement, rallying all the way to $1,321 an ounce just yesterday on Thursday for a gain of 4% in less than 24 hours, while silver jumped to a 3-month high, climbing 5% to post its biggest one-day gain in 4 months. So in the other precious metals markets, platinum rose 1.6% to $1,467 an ounce, and palladium gained 1.5% to $835 an ounce. Both metals traded near 1-week highs as mining strikes in South Africa continue as mining companies and workers fail to reach a deal to end the country's longest and costliest mining strike. So we'll take a look at the technicals very shortly. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas and agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Cowsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading, and prior to co-founding the Gold and Silver Club spent over 5 years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on Financial TV. So that's just a quick background on the Gold and Silver Club. Currently, we are trading on gold at $1,314 an ounce. So we are just about 70 points shy of yesterday's high at 1,321. The top trades of the week using the Gold and Silver Club signature trading strategies. We've had some great trades this week, particularly helped along by the FOMC statement where we saw a rally in the precious metals. Platinum, first of all, earlier on this week had a lovely bounce off this trend channel. Nice risk on this, 100-point risk for a 300 points profit for a lovely 3-to-1 on platinum, so $3,000 profit for each lot traded. We also had a beautiful move on the palladium, bounce right off a major trend channel. The risk on that was 75 points, $750 risk for each lot traded for a profit of 180 points or $1,800 profit for a lovely 2-to-1. And of course we had the gold breakout yesterday, which we caught in style. Nice breakout from the Wednesday's FOMC and broke out of the trend channel, came all the way up to the secondary trend channel for a 390-point move in less than 24 hours. 100-point risk on that for each lot traded. So 1,000 US dollars risk for 390 points, 3,900 US dollars profit for a 4-to-1. So what we'll do now, we'll just take a look at the technicals. We'll go over into some live market technical analysis. The first market I want us to take a look at is in fact copper. Copper, we've had a tremendous breakout just today. Nice V-shaped reversal pattern on the daily here, which we have just broken through today. Actually, you can see here broke above 3.0717. So beautiful move. You can see we've come down just to nice breakout today. And that looks like it's going to continue well into the close today. So we're getting a really decent move here on copper to the upside. We've moved so far today since this breakout, circa around 43 points or so. So it really is moving very nicely indeed. We expect that to continue the breakout to the upside. In fact, we're getting quite a decent little move at the moment on gold as we close the day. Just like to point out on gold, if you zoom out to the daily channel here, you'll see going back to the beginning of November 2012, we've got a very clear downward trending resistance channel, which in fact, this is the level that we tasted just yesterday at the 1321 mark. You can see on the daily, we saw some profit taking a little bit earlier on today. However, we're finishing the weekly here pretty strong here, just at 1317. We closed at 1321, just shy of that yesterday. Nice hammer on the daily, which is really setting up nicely into next week. If we can clear above 1321 here, we should get a decent breakout to the upside next week. We're going to be looking at the next really key psychological numbers at 1325 and 1350 above, but we're really looking here to get a decent breakout as we go into the 23rd, Monday, 23rd of June, if we can get a breakout above last week's high. Silver, of course, had a beautiful move on silver. We finally broke out of this downward trending channel we've been discussing a lot recently on these webinars, and you can see the downward trending resistance here. It's been in place for over 3 years now. We have finally broken through that just yesterday on silver. We're currently trading at 2090. In fact, we're pretty much up to yesterday's high now. If you just go out to the daily here, you can see in fact we're just about to almost clear yesterday's high here. So we're a beautiful move. We in fact had a really decent breakout yesterday. Just above the 20 level is where we saw a 90-point move, and it looks like we're getting a late in the day rally actually on the as we've just opened for the US markets here on Friday, 2091. If we can clear above 21, we should get a decent rally to the upside here on silver, so I'll be looking out for that. Yeah, particularly we're at 2093 at the moment. We look like we're going to do it in fact very shortly on silver. You can see here copper getting a decent breakout now, really starting to surge. Gold looks very close, only 30 points away, $3 move away from breaking 1321, and silver looks like it's just about to take out yesterday's high here. So we can see in fact we look like we are just about taking out yesterday's high here on silver at the moment. So do keep an eye on the metals, guys. Looks like we are going to close again higher here on the metals as we go into next week. So with that, we'll also take a look at platinum and palladium too. So you can see here platinum got a lovely bounce off a major area of support over the last week. We can see we've come down and retested that again. If you go out into the historical, we're in the July contract, but if you go into the historical chart, you can see how this trend line has provided a lot of support previously. We caught a lovely move on platinum this week, over 300-point move. Again, getting some support here on the daily here for platinum. Also, palladium is getting a nice move to the upside as well today. You can see we're just on the futures contract, but we had a lovely bounce of a major trend channel, and we're getting supported again today. If we get a follow-through continuation here with gold, silver, copper, that will just follow through to platinum and palladium, so we could really close the week much higher here. Take a look at the oils. Oil's looking good. We're really looking at now the next level to break out at the moment. The 106 level at the moment for WTI crude oil had a nice consolidation this week. Just ricocheted really between the 104.50 up to the 106 level. If we can get a breakout today, we should be due a nice move to the upside, probably in the region of a dollar move up to the 107 level. Also keep an eye on Brent. Brent just consolidating at the moment. Today's volatility hasn't been too much, but usually we can pick up as we go into the Friday close, and I'll certainly be watching out for that on Brent as well. If we go over to the softs, looking very interesting at the moment. Wheat, if we take a look at the daily, wheat did get a little bit of a lift earlier on today. However, it is selling off. We've come up to a major resistance level at 595, which we can see the market has just been really struggling with here. We've got a lot of inverse hammers. We're still finding resistance at the 595 level. I do maintain, whilst we stay below key EMAs and we keep in the overall downward trend, the trend is your friend for now. Until we actually fully break out of that. So we're looking good still for wheat here. If we go and have a look at corn, corn actually on the daily has had a bit of a retracement. It's come up again to a key level of resistance around the 450 level, nice psychological resistance level. The softs along with the metals did get a decent move yesterday after the post FOMC. In fact, coffee is the best mover at the moment. You can see here on the weekly and also the daily that we're getting a pretty decent breakout to the upside on coffee today, and we'll see whether that gets maintained right into the close. And of course, the star performer of the commodities at the moment, still cocoa, maintaining a very strong upward trend here, still continuing week after week to get higher highs here, and we're just looking to stay within this overall upward trend at the moment, which we've been in really since about the last year or so, since July 2013. So still maintaining that strong trend here with cocoa. So ones to watch at the moment, definitely copper. There you go. Even whilst we've been on this call, nice surge at the moment. Gold, see if we're going to take out yesterday's high here of 1321. Silver is on the move. If it gets a move above, a breakout above 21, likely to continue. So there's a lot going on, a lot for us to look at in the markets. So let's just have a look at the key news announcements as we go to the next week. So we've got the week ahead. We've got Monday the 23rd of June at 4 p.m. Central Africa time, 10 a.m. Eastern time. We have the US existing home sales. Those home sales measure the change in the annualized number of existing residential buildings that were sold during the previous month. The report helps to gauge the strength of the US housing market, and it's a key indicator of overall economic strength. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Then on Tuesday the 24th of June, 4 p.m. Central Africa time, 10 a.m. Eastern time, we have the CB Consumer Confidence. That report measures the level of consumer confidence in economic activity. It is a leading indicator as it can predict consumer spending, which plays a major role in overall economic activity. Higher readings point to higher consumer optimism. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Next Wednesday, the 25th of June, we have at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US core durable goods. That report measures the change in the total value of new orders for long-lasting manufacturing goods, excluding transportation. So higher reading indicates increased manufacturing activity, and a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And then as we go into next week, from Wednesday the 25th of June at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. Next Thursday, 26th of June at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. It is the earliest US economic data. Week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And next Thursday, 26th of June, 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage report. So the Energy Information Administration, the EIA, provided the natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish, which always sees a nice profitable day trading opportunity. Okay, so those are the 6 major announcements we need to look out for in the week ahead. And of course, for those of you who like to take your trading to the next level, you can find out more about how to learn to trade commodities with the Gold and Silver Club at our training centers and online. Very simply, you can just request additional information on our upcoming courses and live trading room at www.jointhegoldensilverclub.com, or contact our Johannesburg office. Very simply call us on +27 11 083 8403 or email us at office@thegoldensilverclub.com to get in touch about our upcoming courses. So I'll leave those details on the screen for you there, and with that we wish you good luck for next week's trading. Have a great weekend and we'll see you on the next one. Okay, thanks everyone. Bye bye.